positive consumer sentiment has been reported as the economic market heads towards the festive season. According to Deloitte's latest consumer signals report, there's a display of positivity over the near-term financial future, possibly driven by the easing of inflation and a hold on interest rates. Hannah Marais, acting chief economist at Deloitte, speaks to us now. Thank you once again for your time, Hannah. This is positive, so consumers are expecting to spend a little more. Is that because of the silly season that we are approaching, or generally sentiment is turning towards a positive tide?
Thanks so much, Tumisang. And yes, I think it's obviously good news for us to see some of that optimism and positive sentiment coming through. This is, based on data that we collected at the end of October and early November. So it certainly also includes, spending intentions that we saw around Black Friday and going into the festive season. And I think, particularly if we compare this to a year ago, we are in an environment where, we are seeing inflation expectations come down. Yes, it is a seasonal effect, but it's also, I think, looking at spending intentions and being able to make payments in particular, given that we've seen a hold on interest rates over the last 3 MPC meetings. So I think it's both seasonal, but it's also in terms of the outlook, both the global economy as well as local economy going into 2024.
Now, how much of the spending intention is still quite cautious, especially with regards to how much of the consumer has been under pressure throughout the year?
Yeah, I think we've all been under pressure this past year, and it certainly has been a difficult year for consumers. So we've seen, behaviors change in terms of, how we consume, what we consume, and ultimately how we make ends meet. I think just in terms of, spending intentions and some of the anxiety drivers that we have seen is, consumers are still struggling in terms of the level of savings or savings that they're making at the moment, not having enough money at the end of the month, and they have been and continue to delay large purchases. And I think that has also then seen that, spending intentions have been more on essentials and less discretionary items. We've seen it more on groceries, particularly on housing as well. There's a bit of intent coming through on entertainment, for example, as well, but particularly larger purchases, bigger durable goods. We do see those intentions being postponed still. So that's how consumer behavior has changed and is likely to trend still in the next few months.
Now, to what extent, Hannah, is the level of prudent behavior representing across income groups?
Yeah, look, I think when we look at some of the consumer confidence indicators as well, I think we're actually seeing more confidence in lower income segments, which is interesting. And that could be, for example, a case of, the social relief grant having been extended. We're seeing some of the employment numbers that are coming through also in the lower income segments. And obviously higher income consumers are exposed, mortgage payments and perhaps to higher interest rates more so as well. But certainly when we look at, disposable income and real disposable income not having kept up with inflation across different segments, what we are seeing across income segments is that prudence, we look at it from a trade-off perspective as well as an economizing perspective. So consumers are, for example, eating out less still. They're still making more meals at home. They are trading off still in terms of, for example, purchasing store brands. They are buying lower cuts of meat, for example. And they're certainly also looking at reducing waste. And that is across income segments. So that's something that we've continued to see come through in our data and in our report.
Finally, are we likely to see this marginal positivity in sentiment with regards to consumer spending spilling over into maybe next year?
We do certainly hope so, and we will continue, to check the pulse of consumers. I think, the intentions, particularly in the longer term outlook, for example, from our vehicle purchasing intention perspective, which looks 6 months ahead, we're seeing, a positivity come through as well, and that will certainly link to expectations around interest rates and hopefully interest rate cuts as well from the end of the first half in 2024.
Acting Chief Economist at Deloitte, Hannah Marais, speaking to us about their latest report, consumer behavior, indicating that there is an uptick when it comes to sentiment turning positive.